Good morning, everyone. This is Srikanth Rajan, and welcome back to the Wealth Management Podcast from MPIinvest.com. So, talking about the first important thing, that is the market. Yesterday, the markets fell big. In fact, the major support of 21,900 was also broken yesterday, and it has closed lower. So, this is indicating actual major bearishness in the market. So, what actually led to the fall is something that we will discuss today. But apart from that, also one very important thing that we'll discuss is what should be a strategy for the next few months. So, talking about the markets at this point of time, well, if you see, most of the global markets are close to their high, and whereas if you look at Indian market is way below its all-time high. So all this started majorly with the electoral bonds issue coming up, and from there, one after other, there were a lot of of course, if you talk about reasons, there can be multiple reasons that can be connected with the fall in the market. But then yesterday specifically, if you see yesterday, the major fall was led by TCS and Infosys. So TCS, naturally, it was a clear thing because there was a huge amount of shares which was being sold by Tata Sons in the open market, as they had to raise funds, and that was something which led to the huge fall. In fact, at one point of time, we could see TCS was up down more than 4% in a day, and TCS, which has one of the highest weightage in Nifty, so has led to the major fall yesterday. If you see yesterday, Reliance also was weak, and overall, the markets have actually broken the major support. Now, technically, everybody might say that, of course, technical supports have been broken, so there can be a big fall. Well, I don't believe in technicals much, but then I talk about fundamentals. So, only thing I know, nobody in the world can ever predict the bottom of the market, neither the top of the market. So, only thing I know is if the market is trending downwards, it is time to buy. Absolutely. So this is the time many people think, okay, let's book profit, let's get out of this. No, if you have to book profit, you should have done that long back when the market was at its peak. But that was the time when a lot of people felt that I should hold because it market may rally further. So this is not a time to sell. This is a time to buy. So how do you buy it? Now it's simple. Just go in chunks. Don't go in a one shot investment. Best is SIP. In fact, like I always say, in fact, the best thing that we do at MPA family is the daily SIP. So every day we average on the investment, and that way we are able to make much benefits on our returns on our investments. So, well, this is actually the time that you should start investing if you have not done so yet. And if you have not done so yet, you should get on a SIP mode initially and learn how it works. You will make money. So that's something that I would say at this point of time. So where is the bottom? I don't know. Nobody knows in the world. But then one thing is for clear, that India has still a lot more to move forward. So for the short term, we might have a bearishness, but on a longer term basis, India will definitely see the growth coming in the market. So that is why, as long as human race is alive, markets will continue to go up. But only thing is, it has to have a push. That push is something that may come a little later, but patience always pays. So that's something I would like you to talk about right now. But then, as of now, like I said, the few months the strategy should be probably to start increasing your investments in the SIP mode so that you can take benefit of the fall. And I mean, we don't know how the fall is going to happen. But like I've always told you earlier, markets don't react twice for the same reason. So electoral bonds have already been factored into the market. Now, of course, one more uncertainty that is still lying is the election. Now, election also to some extent has been factored into the market, but I would say these are all on the opinions that people have on the election. But let me always tell you, election results can change overnight also. So I would only wait. Not only me, there are many major investors who would wait till the actual election results comes on June 6th. So till then, markets will continue to be kind of this wavering mode where they don't have a clear direction. So at this point of time, one thing I'll say is, if the global markets are running higher, Indian markets are not performing, then definitely Indian markets will try to catch up as soon as the India related problems are sorted. So what do you mean by India related problems at this point of time? It is electoral bonds, and of course there are some news coming about Adani, and all those things. So these are things that's going to be getting factored into the market. And second thing is, of course, the election. So with all these things, markets would be kind of holding back itself for some time. So all-time highs would be kind of away for some time. But then markets can be more of sideways. Not major fall is what I'm expecting in the market. So there could be small falls. Intraday there could be a big fall, but then it may recover and still go. But this downward movement would be on a slower trend, is what I would say at this point of time. So that is the expectation for now. And like always tell you, see, yesterday I was just having conversation, I think with one of our members, and I always tell one thing. So markets can never be predicted, that's for sure. But along with that, one very important thing is, if somebody thinks that you can predict the market, you are to be doomed in the market. So markets can get really dangerous. It is like that unfaithful friend who can just turn face away from you at unexpected situations. So markets can never be predicted. So the best way, like I say, is stay invested. And always, if you want to make long-term wealth, then the best way is to stay invested on a consistent basis, invest into the market, and make money out of it. So apart from that, today the focus major would be on the US. So US market today, there is a Federal Reserve meeting. For people who are new and who are not aware, Federal Reserve is a central bank in the US, and today they have a meeting scheduled to discuss the monetary policy. Now, if you discuss the monetary policy, what is happening in the US right now? US interest rates are quite high. So if you look at the period, if you see, interest rates in US have been always in the range of 2 to 3% for a home loan or a car loan. But at this point of time, it's almost double the rate at this point of time in the US, which is kind of very discomforting for the people who are in US. So with all these things, the US markets have been finding it really difficult to move around, and that is the time when these people have kind of, since the interest rate are at peak, everybody is actually waiting for the interest rate cut by the Federal Reserve, which is the central bank in the US. So that is something which should be focused. If you see, most of the countries across the world are sitting with a very high interest rate, except of course Japan being the exception. So of course there are a lot of news on Japan also. I'll probably talk a little later. So because of this huge interest rates, what is happening is the home sales and the car sales are not, even though they've been doing great in India, but overall the globally are not in a great shape. So it is generally when the interest rates go down, when the interest loan lending rates goes down, is when people flock to buy a home or a car. So that is going to be setting a trend in the market. So everybody is kind of waiting for the rate cut, which would be led by the US. India also has not had a rate cut, but of course Bank of Japan, which is central bank in Japan, has already done a rate hike, not rate cut, because they are different. Because you should not be comparing that with India, because Japan is in a in a totally different direction, not a wrong direction. It's a totally different direction. So for last 17 years, they are sitting with almost zero rate cuts or rate hikes. And for 17 years, I'm talking about, not 1 or 2 years, 17 years, they've not had a rate hike. In fact, I have a friend, one of our members in MPA family from Japan, who was really crying over the way the banks don't give any interest in Japan. And not only that, the yen also had fallen by value so much that he, being an Indian, was feeling bad to transfer yen to India, so to his family in India. So that was the situation. But now from there, Japanese yen has kind of rallied after the news of the interest rates hike coming in. Now, okay, that's a question probably why you would think, why would the Japanese yen rally when the interest rate is being increased? So it's something like this. Many times what happens, like for example, if you have a connection in Japan, and if Japan has a low rending rate, like for example, this friend of mine who is in Japan, he might even think of borrowing money from Japan and investing that in India, where you get a better return. So they might take lend money from there, borrow money from there, and from there he invests it into real estate in India, or it could be stocks in India. But whatever happens, so those interest rates, since it was low, it was good for them for borrowing. But now that they've started rising the interest rates, there will be a fear. So these people who have taken money outside Japan will start bringing money back to Japan. And when money is coming back to Japan, naturally yen value will go up. So that is something which is, so naturally Indian INR cannot be taken to Japan. So INR, they will start buying yen. And when buying comes in yen, the demand for yen goes higher. And that is how the price of yen goes up. So that is something which is a good news for people who are having money in yen in Japan at this point of time. Because as the Japanese yen increases, for example, this friend of mine who is working in Japan, who is from India, would be happy that he is getting an increment in his overall income in INR terms, even though his job has not given him an increment. So that would be a good thing for these people. So that would be one way of looking at it. So money can get back to Japan and that can increase the yen value. So overall, the markets are seeing a different view in Japan, but Indian markets cannot be related to Japan. Indian markets or most global markets are not connected with Japan on this. So if people say, of course, I read some media report where they said Japan has increased the rate. So Japanese, that is the reason yesterday market fall happened. But absolutely, I would not support that view because Japan has not had any rate hikes in last 17 years. India, the other side, has one of the highest interest rates in the world, and with that, we are already sitting at the peak of interest rate. I think a home loan today has touched almost 10%, and a car loan is also almost 9%, so which is one of the peak at this point of time. Even if you look at FD rates, they are sitting at 7%, and that is one of the peaks in Indian market. I mean, I'm talking about the recent past. So if you see, last just 2 3 years back, it was at 6% interest rate FD rate. Now it's come to 7%. Why is that? So we are at the peak of the rate hike. Now the peak, from there we will see rate cuts instead, unlike Japan. So what can happen is in the coming year, I am expecting by December to see some rate cuts starting, and I am actually personally waiting to buy my car also. In fact, I like I've told, I don't even plan to buy a car on loan when the interest rates are high. Well, in fact, my strategy of buying a car is different. I take a loan only when I have money. Yes, so I'll explain that's probably some other day. But then that is the kind of wait I'm doing because I know the interest rate will go down, and that day I will take a car loan and buy a car with when my investments are fetching very good returns. So that way I don't touch my investments. Still, I can buy a car with a loan. So these are things that I do. For, of course, if you, I'll keep sharing these things once in a while. So that way you can plan your investments. So this is a wrong time to buy a home or a car. Interest rates are peak, so stay away from them. This is a great time to invest in the market. So use that money to invest in the market. Probably tomorrow when the market goes up, book some profit and buy a car or a home. That would be your best alternative to do. So these are things to be looking at this point of time. So of course, I think we've spoken a lot of time today. Well, of course, the timing has changed for our podcast. Well, it's simple. My daughter has got her vacation, so as long as her vacations are there, I would prefer. I would do my morning activities earlier so that I can have my morning walk and then come back and then start the podcast. So well, that's the change. So until it's open, her school reopens on 1st of April. We'll have a timing on around 8:15 p.m. Sorry, 8:15 a.m. for the podcast, and after that we'll change back to 7:45 so that before once the school opens, I will do the podcast before she leaves, and that's how my personal life works. Well, that's it for now. This is Srikanth Rajan signing off. But before we leave, do press the like button if you love the content that we share, and share the podcast with your friends and relatives to help them learn and invest together with us. And if you've got any questions or if you want to start investing, simple, go to mp-invest.com and schedule a one-to-one meeting with me, and we will discuss and plan your portfolio investments. So that's it for now. Goodbye. Have a great day. See you tomorrow with more details.